Hello, everyone. How you doing, Gorshi?
Morning,
Everyone
Dale.
doing okay? Hey, Brian, how are you?
Yeah,
So,
not bad. You?
let's have a great week. I'm doing okay. Monday morning's always a little tough. I'm waiting for the rooster to come out. It still hasn't. Blake and I are up before the roosters. So, looking at the board here, I could actually say that I don't have a lot of conviction today. Coming into this week, a couple of things I thought about was maybe taking a shot at euro pound for a higher low. It's not a big risk. You give a little tolerance over right in here. And of course, oil is making a new high. It's not confirming still on, multiple time frames at this new high. And, one comment I could make with crude making new all-time highs, and it's probably more dollar influence, but, Canada, after trying to put in a little turn here, with crude making new highs, is not making new lows, but that's probably more about the dollar, which I didn't think we were going to hold this level. So, gave you, because I thought we had too many opportunities to just buy 93 and a half and risk 10 pips, but yeah, you can't ignore the price action. So we'll see how much follow through. It's, mainly weakness in euro, and the yen I didn't think was through. We got to this, broke 1370, so I thought we might see the 12 handle, mid 12 handle. So I don't know about you, Ryan, but I don't have a lot of conviction. I can't chase the gold or silver here.
Yeah,
So
it's
S&Ps, I don't know. I mean, it's playing around with new highs. Did it last week. Nasdaq's definitely underperforming. So, I guess there are days, where you don't do much, and
yeah.
maybe things. Go ahead.
Mondays can be a bit tough to you sort of start coming off if you've had a heavy weekend. I'm sure you do, Dale, partying. It's all hours. It's Monday. It's usually Tuesday when the week
I
starts,
think
isn't
I
it?
stayed up till 10:30 Saturday night,
Oh,
11
blimey.
o'clock. Yeah,
Yeah,
which to me is like 4 in the morning now. So
yeah,
anyway, yeah.
yeah.
So I don't know, when you look at any news overseas that's pressing the euro and driving the dollar higher that you're aware
No,
of.
not a lot. I mean, we got a bit of roughness going on with Poland at the moment. Threats being thrown around over this law stuff. It's not a big deal. It's
The pipeline.
not the pipeline. They voted against some law in Poland, or their court said that part of their constitutional law supersedes that of the ECJ, and
Oh, I see.
that's all
About
kicked off. And
vaccine mandates.
I don't think it was about vaccine. I can't remember what it was about actually.
Oh, well,
It
Jay's
was
the
one of those.
same mandates.
It's
Yeah,
like a storm in a teacup. It's one of those things that really is
right.
nothing, but it all gets blown out, and then the threats get thrown side to side. We've also got Turkey, potentially expelling diplomats from US, Germany, and other places. So that's another spat that's coming into things. I don't think that's really behind these moves. We're possibly seeing some early ECB repositioning, because obviously that's this week. But it seems to be pretty much, contained to euro pairs right now.
Okay.
It's not a widespread thing. You were talking about gold a minute ago. I thought that the price action on that from Friday was pretty telling. And when we had that move, that sharp move lower in
Yeah.
gold, over Powell talking, and again, he wasn't really saying much. I think it was more of an algo move, and gold came off.
Yeah.
If it was 20, 30 pips,
It's gotten
and
a lot of it back. Yeah.
yeah, it's got a lot of it. I mean, I saw that and I grabbed a bit down at 1784. So I'm riding that now, and I can see us having another look towards those highs of last week, maybe even up to the sort of 1720 area.
Okay.
But that price action was pretty telling. We bounced back strongly from that, so it's still looking fairly bullish.
Okay.
From that
Yeah, it did. Silver not bouncing back as well. And Blake's going to be with us in a few minutes, something I was thinking about that could develop in silver if we don't just blast here is right here at 25, kind of a neckline.
Hmm.
I'd love to see one more pullback to develop some type of right shoulder down here. I would
Yeah.
try it. So we'll see with silver.
Yeah, and as you said, dollar yen, it cracked through that 70-80 zone, but it it ran down to what, 34 was it or something on Friday.
Yeah.
And that's a bit of a prior support area after the
Yeah.
initial break up, but it's not moving any great beans, is it? It's not making a run for it. I thought we might get a lower push to 113 on that break, but now we're sitting right in the middle at 72. So
Yeah, it still could, and it could just be a hang day after selling off. And
yeah,
yields were interesting. I mean, they came off pretty good on Friday after, um, I guess, Powell's speech, and you know,
yeah.
I might be a failing rally. It's possible. I mean,
We keep
everyone's
seeing these quick moves to new highs, and then it all just runs out of puff, doesn't it?
yeah, like this last
Yeah,
3 times.
you think it's going, and then off it goes again. But the trend is up.
Yeah,
That's quite
trend is
clear,
up. Right.
and the trend is your friend, as they say.
Yeah. Okay. Well, I believe Blake is ready
I'm here.
to.
Good morning.
Oh, hi. Oh,
Morning,
gosh.
Stel.
Yes,
Hello.
I know you're here, Stel. How are
Oh,
you,
you
buddy?
guys. Oh, it's Stelios. Oh, him. Is
Oh,
it?
the shooter. The shooter.
Shooter, as in
So,
pool shooting.
okay. So, what do you think?
So, hold on a second.
Okay.
Hold on. I'm sorry.
You put your
Okay.
teeth in.
So basically, I think what we got last week, late on Friday, with Powell speaking, is confirmation of what the market's pricing. So the Fed has been telling us they're going to be tapering November or December, and then they go to the first half of 2022, and then they're done. And we've been hearing it from them, and the question was, what does the market think? Well, now the market moved a little bit, after his comments, and I think we're now fully pricing that. And to be fair, it's going to be a big surprise if they don't do that. As I've said before, I think the risk is for them to under deliver, and that's something that we have to be wary of. But I think that's what we saw on Friday. And metals, gold tried to go past 1800. It failed twice. Now it's trying again. We have some pretty important data this week, but really it's all about next week. This week we get GDP, we get a few other things, but really it's next week, the Fed and payrolls. But as I said before, the base case scenario now is that the Fed will be tapering, and they will complete it by the end of the first half of next year, which is, I repeat, I've said this before, I think it's aggressive. I think it's, they've said, oh, we're going to do it slowly, where this isn't slowly. This is within 6 months. So I think it's a bit aggressive, and I still think the risk is for them to under-deliver. But otherwise, it's a euro move today, right? The dollar is not moving against all currencies. But I think it's just noise. I really do. Obviously, 20 pips here, 20 pips there, you can trade them.
Yeah.
But for me, it's noise, and yields are, again, they're trying to break out, they're retreating. They're trying to break out, they're retreating. So again, unless we hit the previous highs in 10-year US, which was 176. I was talking about 170 originally. Now I'm looking at the levels, and really it has to break out above 176 for me to change my tune.
Yeah.
Okay. But yeah, otherwise.
All right. Well, you said two things. If the Fed does what it says it's going to do, it's aggressive. Which Sheila Bair agrees and says that he better go slow, or there could be a financial problem somewhere. She's she called the last one. Warned about the last one. So, but if they're under delivering, that would mean they are going to be moving at a slower pace or delaying the start of it, right? If they under deliver.
Yeah, I don't think they're going to delay the start. This is their opportunity, but I think they will have to see what the reaction is by the markets, and then they're going to either keep with the schedule or fine tune it.
Or,
The other thing which amazed me, and I wanted to talk about it, is oh God, I forgot her name now. She's no longer chairman. I forgot her name. What's her name? Oh man,
Yellen?
Janet Yellen, man. Sorry, memory of a goldfish there. Janet Yellen said something very important. They're considering taxing unrealized capital gains on stocks. Now that, for me, I was discussing with some friends of mine who work in banks in London, and I said, what do you guys think? And they all said it sounds, it's desperation. It's like, why would you do that? You want to get some cash flow in now. The more I think about it, I'm like, dude, this is, it sounds like somebody's bankrupt. They need money now, right? Today. And we don't care what happens in a year's time. I just need the cash now. That's what it sounds like, because there's absolutely no logic to tax unrealized capital gains. I mean, it's just ridiculous. And anyway, I don't know what you guys think about that, but I was reading about it and I thought it was some kind of a joke.
But, and some type of global corporate tax, that was kind of passed. I mean, one world economy. I don't know.
That's a different thing, but I agree. But it's a different thing. But this thing, unrealized capital gains tax, I don't get it.
Yeah, I don't know. Yeah. What do they do? Take a point in time, because it changes day by
day. Year end statement.
Is it like a mark-to-market tax return? I mean, how does it work? I don't know. Sounds like something they would do here in Greece, where they need to get cash any way they can. They tax you on everything. But it's just it just shocked me. I don't know what Blake thinks, but it's ridiculous. I mean, what it will do is it's going to cause people to sell, because the last decade stocks have been doing very well. So people who don't want to get this tax payment, they're going to sell ahead of this law being passed. I mean, that's what I would do.
Yeah.
Yeah, exactly. That would be December.
Yeah.
Yeah.
I mean, there might be some tax selling going into the end of the year. And good morning, everybody.
Good morning.
Good morning.
Happy Monday to you. Stelios said, you were saying that there was just noise in the FX market overnight with the euro lower. You know what? I'm all I've heard for the first 12 minutes since this webinar started is just noise. I'm just kidding. I'm just kidding.
Yeah, thank you.
Just kidding, guys.
That's nice on a Monday. Cool. He's kicking off already.
I come out swinging Monday. No, I honestly, I was actually away from the computer, so I missed exactly what conversations you were having. So because I was just kind of running around here around my desk just for a second. But so I didn't catch the conversation you had about the taxes, but you had mentioned, I caught the very tail end of it, and I think there might be some tax selling at the end of this year, potentially. As we come into a new year. But what are your thoughts on all that?
Tax loss selling happens every year, but this will be capital gains.
Capital gains, yeah. When's the last time we had some tax loss selling?
I don't know.
It's been a while. It's been quite some time. So but going into like more of the bigger kind of themes in the markets, and Stelios, I did catch what you said a little bit earlier. This week we don't have a lot of data, but we do have some central banks that are meeting this week. We have the Bank of Canada, and the big one, which will be on Thursday, is going to be the European Central Bank, and we have the euro actually trading at lows this morning, and the euro has broken through. Last week, I'm gonna share with you something real quick. If you obviously, if you're a ForexAnalytix subscriber, you come to our if you're a member, you come to our our webinars, and if you look at this support and resistance in the euro, and by the way, we do all of this work about exactly 1 hour from right now. So if you're a ForexAnalytix subscriber, you have what we call the Morning Edge webinar that takes place, and so you can tune into that. Every morning last week, we wrote down 116.15 being support. I want to say we did it every day of the week last week. And the reason why, if you look at the euro dollar, we had support right here. It was the breakout point, and then it started to form as channel support too, because you have to imagine, by beginning of last week, it wasn't formed as channel support. It was just previous resistance, current support. It's very simple, basic technical analysis, right? And then towards the end of the week, we formed some lows right at the 116.15, 116.20, and that became channel support. Now this morning we've broken below. So, if anybody was long last week, their stops are being triggered or have been triggered as of, probably the last couple hours. So now that we're, this, if you think about the price action from here, the fact of the matter is we're trading lower, but no buyers are coming in. So whenever you get, some selling in this case, and no one's stepping in because they're not finding any value here at this 116 level, I automatically start targeting, next support, which will be 116.80, which is the 618 retracement and these lows down here at 115.17. Now, the reason why this, in my opinion, is a big deal, because now we're heading into the European Central Bank week. We have the, ECB coming up. And I can't, I still go back and Ryan will, is probably getting a giggle every time I say this, but, going back to the conversation that I had with Michael Brown from Caxton, and he's like, he used to look behind me and his window. He's like, you see pigs flying? That's the next time the European Central Bank's going to move on rates. And when pigs fly, and I don't know, I still am cracking up from that. But the ECB is meeting this week, and I don't know how hawkish they're going to try to appear, but what are your thoughts there, Ryan? This heading, and don't give it away, because I know you and I are having an interview tomorrow. Yeah. I just want to, tomorrow. And we're going to dig into how you feel about the ECB, but give us like a little bit of flavor of what you're thinking. Flavor.
Yeah. Hawkish they're not going to be.
Okay. Well, then there we go. And so, you got the euro breaking down, and Stelios said, hey, it's kind of the euro moving against everything. And then, you look at the euro yen, and the euro yen has a, head and shoulder pattern it's trying to play out. And look, the euro yen was a real nice, well, there are a couple things to unpack on the price action in the euro yen. First of all, we had the AB equals CD. All right, that completed. The 88% retracement held. That was like the last line of defense for any bears to really hold. We also made a lower high, and so, but I also have to take a step back and look at all the other yen pairs and realize all the other yen pairs are really moving. I still am in the camp, and you guys have heard, I've blogged about it. I've said it here, and you guys have, I know we've all talked about it. This 128 level is huge in the euro yen, and it continues to be huge. And if you don't understand why, it's because it's a 13-year trend line. So this is the 2008 highs, 2014 highs, 2021 highs. We broke out, we held the breakout point at 128, and then we bounced. So as long as we're above 128, it's really hard to be bearish, like longer term. But at the same time, you look at all the other yen pairs, and they're really breaking out. I mean, we have some serious breakouts happening, whether you're talking the guppy, the Aussie yen, New Zealand yen, Canadian yen, really big breakouts happening here. But the euro yen, not so much. It doesn't look as bullish. So, and we're making a lower high. So I don't know if that's grounds to just start shorting the euro yen, but it also gives you a, kind of a tailwind, if you will, if you're shorting euros in whatever way, shape, or form, whether it's the euro Aussie, euro New Zealand, euro dollar, euro sterling, however you're expressing euro bearishness, you have the euro yen also on your side that's making lower highs. Now, I personally, I think we're coming right back down to this breakout point here. This real big pivot that comes in right around 131. That seems like a very logical place, just because we'll, complete a head and shoulder pattern for the most part. that seems very logical that we drop back down to there. It's if I had to guess, it's a 50% fib, maybe a 618 at this entire move. Yeah, it's a 50% fib or retrace. It's not a Fibonacci. 50% retracement is not a Fibonacci number. It's just it's a 50% retracement, which many people look at. I think that'll probably provide a lot of support. So if you're looking to go long the euro again, maybe that's the place to do it. Maybe we even see it following the ECB. So anyway, I just want to kind of give you guys a little update on how I'm seeing the euro. But it's been an overall pretty slow market today, and we do have equities that are still, for all intents and purposes, we're at all-time highs. I mean, what do you guys make of the price action here in stocks? I mean, I thought we might have a false breakout from last week, but as I mentioned in the week ahead video, if you guys didn't see that yesterday or Saturday, I think it's a false breakout, but here we are Monday morning, bid up right to the highs. So what are your thoughts here, guys, regarding stocks?
Well, I said last week that ahead of the first week of November, we're going to grind, and I still think we're going to keep grinding, and the grinding is going to be higher going into the Fed. Unfortunately, and I keep saying that, but yeah,
it's going to grind you into submission, is what it seems like.
Yeah,
right?
it's just demoralizing, right? Not getting a two-way action, but I think unfortunately that's where we are. And what's going to change it? The Fed might change it, but until then, I don't see anything.
Ryan, I want to catch your thoughts here, and Dale, I want to hear what you have to say too. But I pulled up this chart on the week ahead video, and I want to show you exactly how I played the New Zealand yen on the short side. And if you guys watch it, excuse me for just kind of reiterating here, because I want to make it an important point, because there were some comments on the video, on the week ahead video, of people like, oh wow, I didn't know that about the New Zealand or about the head and shoulder pattern. So I don't play head and shoulder patterns as continuation patterns. A head and shoulder pattern by definition is a reversal pattern. That means after a prolonged trend, whether it's, well, in this case, it's been a prolonged trend higher, right, in the New Zealand yen. You notice how the inverted head and shoulder pattern is as a continuation to new highs. Same thing with you see a lot of people on the S&P saying, oh, look, inverted head and shoulder pattern, continuation to new highs. They are not continuation patterns. Go get your McGee and your technical analysis Bible, and go read about head and shoulder patterns. They are reversal patterns, not continuation patterns. But when you go, and I made this as a joke, but this resonated with a lot of people on the week ahead video over the weekend. Have you guys ever played blackjack?
Yeah.
I play a lot of blackjack, and I always have ever since going to Las Vegas, and I always try to get on first or third base. I'm always on, I'm trying to be on the ends to control the deck. Right. That's, cause you always get somebody that's going to hit on 16 somewhere, and then you got to offset that somehow. Right. So, and you always get those players, right? They're either too drunk, they haven't played enough, and they're always hitting on 16. And you're like, dude, please stop. Right. That's the same thing when people trade head and shoulder patterns as continuation patterns. That's the same person, right? Now, that doesn't mean that they can't make money, because I've seen plenty of people hit on 16 and you're like, oh, wow, how'd they do that? How did they, just pull a 4 out of the deck? I'm not sure how they did that, but they did it, right? Same thing happens here in the head and shoulder pattern. And I joked about it, but it's, that's kind of the way it is. So what I like to do is I like to play the opposite of that. So when we complete the head and shoulder pattern, like in this case, it would take us to the 127% extension. That's when I'm going to short it. I'm going to play counter back, as a false breakout, if you will. And that's how I played the New Zealand yen this week, or last week, excuse me, is when we reached the completion of the New Zealand yen, I shorted it up there. I'm still short. So I am looking for a move back down to 80 roughly, but that's how I just kind of give you guys, I think that resonates with a lot of people, because I think a lot of you guys and gals have probably played blackjack before, right? So
Yep.
Yeah.
I'm the same. I always sit the last hand when I play blackjack.
Try to, yeah.
I can see all the other cards coming out.
Yeah, and you have to offset the drunk person.
Yeah.
Right. It's like, dude, I'm going to take it for the entire table right now. And I'm going to hit right now. And, so I'm going to take the small card. So the dealer can bust because that person next to me that was drinking too much didn't. And so, just kidding. But, I do get frustrated when I play blackjack sometimes. Stelios, what are your thoughts here?
On blackjack, I prefer poker.
Okay. All right. So, all right. And Ryan, what are your thoughts here on the, let's talk the stock market, because the stock market is, again, we're up against all-time highs here. So what are you thinking?
Yeah, I'm thinking that the grind's going to continue. What we are going to be seeing, I think, as we've been mentioning in the last few weeks, is this potential slowdown coming into economies from all these supply chain bottlenecks and stuff. And it's going to be a weird one for the market to trade, because it's going to be a slowdown, but the reasons for the slowdown are temporary and solvable. And so when they get solved, then we're going to see economies bounce back again, because, as I keep saying, the key point is demand. While demand is still there, then we should see a snapback. The problem is, though, like we get with all transitory things at the moment, is how long does that last for, and how does the market really react to that? Because if they start getting central banks saying that, we may not be tapering as much, or we may not be looking towards rate hikes as much because of this slowness, what's that going to do for stocks? It's going to send them into the moon. If there's any hint that QE and all that sort of stuff is going to be going for longer. But otherwise, yeah, it's going to be a grind high, because the tapers are happening, and central banks and the market is looking for economies to remain robust.
Well, I know a central banker, Blake, who's going to be with us, a former central banker. He's going to be with us Friday, who just wrote a report forecasting a recession. So Danny Blanchflower will be with us.
Who's joining us on Friday? Who's the big
Danny Blanchflower?
Danny Blanchflower. That's going to be exciting. Danny Blanchflower is very fun to listen to. He's a fun central banker. Now, Ryan's probably, since Ryan, this is going to be Ryan's first time. I want to say, and correct me if I'm wrong, Ryan, this is the first time since you've been part of the ForexAnalytix family, being from the UK, probably knowing exactly who Danny Blanchflower is. This is going to be the first time you're part of the family as he's being interviewed. So what are your thoughts?
Yeah, it's going to be good.
Danny's was the ultimate dove, right, Ryan?
Yeah, I don't agree with a lot of what he says, but he's good. He's good listening.
Yeah,
most definitely.
Well, he's a professor now, so he could be theoretical.
As long as he doesn't go down the Mark Carney route and
Mark Carney
clear the end of the dollar or whatever.
He's the journeyman.
But I still say you should get him on with Andrew Sentence, and that'd be a good boxing match.
Okay.
Awesome.
I'll suggest it.
There you go, Dale. That's going to be your next, the next one you bring in. Hey, we just have a couple minutes, and I want to point out something else that needs to be pointed out, since equities are at all-time highs or close to. I do want to show that the dollar Mexican peso continues to really find, a base. It's still really trying to build a base around here, kind of like the Build-A-Bears of past. I'm joking. I don't know why that just came out of my mouth. Anyway, and I don't even have girls as kids, but the dollar Mexican peso is like kind of finding some support, even with stocks at all-time highs. You have the rand. Speaking of, inverted head and shoulder patterns in consolidations, the dollar rand is holding up exceptionally well. And I think, for considering that stocks are as strong as they are, you have to keep an eye on these. These are the ones that if they really start breaking out, that's going to be ultimately like the signal to me where I'm like, okay, risk is going to come off here, is when you start seeing some of these emerging market currencies get destroyed. Now, I know, you got the lira that's, moving lower for obvious reasons because of Stelios's best friend that lives next to Greece. Right. All right. Anyway, just some of these emerging market currencies are already showing some weakness, but just keep an eye on them. I think they're going to be important to cue in on. and not QAnon, QN on, as we are as we move into later on this week and seeing how the stock market reacts up at these highs. So I know Dale, you got a great interview set up today with Michelle Snyder, or Mish.
Yep.
She's, you know, I love she posts, by the way, her and her team posts on Trader Summit quite frequently, and they give you a really good sense of what's happening in all markets. So I really enjoyed interviewing her personally.
She's one of
great.
one of the best when it comes to intermarket relationships, and even she, you know, has a metaphor for the markets as a dysfunctional modern family. So yeah, Mish is one of the best.
Yeah, Mish of Market Gauge right here, and this is a post from her, one of her people there, Forrest. But you know, you're going to hear it from the horse's mouth today from Mish, and that
I think she's just put a comment in the.
I think she just left after that.
I'm here.
I didn't. I meant the beautiful horse's mouth. Hey, Mish, how are you? Good morning.
I'm great. Thank you so much for those kind words.
You're a thoroughbred.
There you go. So nice to have you here. Hey, I'm going to let you guys take over. I just want to mention everybody that, you know, if you're ForexAnalytix subscriber, I'll see you on the F.A.C.E webinar with, or excuse me, on the Morning Edge with Stelios and Steve in about 45 minutes. Don't forget, tomorrow I'm going to be interviewing Ryan regarding the ECB. So that's going to be a really good interview. I'm always excited to get, you know, Ryan's more detailed outlook of how he feels about the ECB. So thank you all for your support. Have a great interview, Dale, with Mish. Mish, thanks for joining us, and we'll catch you guys later.
Welcome back, Michelle.
Thank you so much. Do you want camera or no camera?
How about share screen to show charts?
Okay, let's get share screen. And I do have a couple of, you know what, but let's start with this actually.
Okay.
I may switch to a different screen, but yeah.
Okay.
So anyway, hi Dale.
Hi Michelle. How are you? How's the fall going?
Good. The weather in Santa Fe has been great, except too dry. We need rain here in the Southwest.
Yeah, La Nina again, I hear. So I
exactly. It's supposed to make the east wet and the Southwest drier.
And you usually have to buy the grains in a La Nina year.
Well,
and they've been coming off pretty good. Yeah, the beans, $12 beans from 20. So there's been some nice pullbacks there.
Yeah. So how do you want to start? Do you want to go?
Let's go TLT. Everyone's interested in rates.
Yeah. So Dale, so basically we've been really focused on 3 key intermarket relationships to really understand whether or not we're in a risk off, on, neutral, or what have you. Yeah. And actually, interestingly, on Friday, we had some really strong indications, but we went a little bit more risk neutral. And of course, here we are coming in higher today. So we'll see whether or not that sustains. But at this point, the 3 market relationships are, we look at, first of all, the long bonds versus the SPY. And what you see down here in my indicators is the first one is called leadership. So what you want to see is you want to see the TLTs underperforming the SPY in a risk-on environment, for the obvious reason that long bonds, which classically is a flight to safety, you want people to be buying the S&P 500 and not the bonds. And so you can see that they're still underperforming. If they cross the red line, that would mean now that they're overtaking the SPY. That would be a pretty good sign of caution. So right now we're not there. Okay, this here is momentum, and it's the momentum of the actual TLTs. So the momentum is not that bad. So we're in a situation right here where it's still good, but anything like what happened Friday for the brief moment in time when Jerome Powell came out and talked taper, excuse me, another one of those, or another one of the situations where the SPY sort of goes flatline up here near the highs or starts selling off, or the TLTs firm up a little bit, that would be a caution. The next relationship, similarly, is actually going to be TLTs versus the junk bond. So I'm going to change this here from a SPY benchmark to a, actually,
What are your expectations next week, Michelle? Do you have a, you know, is he going to
expectations for the market?
for the
you mean?
Fed? Fed?
Oh, for the Fed?
Yeah.
Well, I think that you know what, you don't hear you hear the other guys saying a lot that they should be tapering and we should be looking at rates and inflation's running hot. And then you haven't really heard Powell say that. So it was the first time on Friday that Powell gave some indication that at least at this point, he's interested in starting the taper program, which is supposed to be in November. What's interesting is the yield curve has flattened a lot, you know, in anticipation of this. So even though the bonds haven't exactly collapsed yet, and I mean the long bonds, you do have the 10-year treasuries that have firmed up. That's where the yield curve flattens a little bit.
Right.
And so it's interesting because it seems like the market is pricing in the Fed doing some tapering and even the possibility of next year some kind of a 0.25% rate rise. And that would be healthy scenario. So to me, as long as they keep talking that and they don't have anything more aggressive, it shouldn't really upset the apple cart too much. And so, you know, that's my thoughts on it. But let's take a look at this. Is very key. And I talk about junk bonds a lot because really people have to understand that when investors come in and buy junk bonds, they're buying companies that aren't having a good balance sheet, but pay very high yields. And so in a risk on environment, you're going to go for the higher yield, right? So what you really want to see in this situation, and this is the second relationship. So we looked at the TLTs versus the SPY, and the SPY is outperforming the TLTs. We can check that off as good. However, is it way outperforming? No, it's come off. So we're at sort of an inflection point. Things have to hold up this week. The second relationship, you can see here that on Friday, the junk bonds started to underperform the TLTs. So why do you want the junk bonds to outperform? Because you don't want people going to the 20+ year bonds, the long bonds. You want them to continue to buy the high yield bonds. And so right now, what we're seeing is junk or HYG, however you want to look at it, is under the 50, has come off, and is starting to underperform the TLTs, the long bonds. Now it's happened before, and it's come right back. So you can see if we go back a little bit in time here, of course, things were, the junk bonds were going up, and that was really good because even though they were showing an underperformance, it was still on the chart doing well. So you need both price and leadership situation.
Can I throw in a question about LQD, which has actually been underperforming junk?
Right. High
and how can that be? Why would you know, investment grade corporates underperform junk just because people want to capture the higher yield?
Exactly right. In a risk on environment, that's where they're going to go. You don't want to see the LQDs falling apart by any means, but I don't consider that as key a relationship as I do here with the junk versus the long bonds. So right now, as you can see, they are underperforming the long bonds. Well, today will be another day we want to see that flip. So meanwhile, we see TLTs are coming in lower. And it's really hard to tell where the junk bonds are coming in. It looks like basically unchanged, maybe a little higher. So we may see that flip. That would be another good risk on situation. And then finally, my favorite, and is really what's kept us very confident in the market right now. And again, I have to change my relationships here, so I'm showing it to you correctly. This is the transportation versus the SPY. Super important, especially now, but always important to me, Dale, as you know, and one of the key members of my modern family is the transportation. But key right now is because what does this represent? So with all the supply chain problems, and with all the numbers we've seen about lower consumer sentiment and people worried about the holidays and planning to spend less, and the fact that even though COVID here seems to be somewhat under control, we're still hearing things like UK shutting down again. Now China saying things are going up. People are still traveling and flying and things like that. So That's why I like to focus on this, because you can go nuts if you listen to all the fear mongering out there. But
Yeah.
yet, even with all of that, look at how robust IYT is. And if you look at it versus the SPY, this ratio is showing that the IYT, or the transportation, is outperforming.
It
So
wants
there
a
you
new
go.
high, huh? It looks like it wants a
Exactly.
new
Could
high.
potentially,
Yeah.
right. So
Yeah.
if you put that all together, what that tells you is that the junk bonds and the TLTs maybe need a little bit more boost. We need to see especially some of the more value type stocks in the IWM to keep up the small caps. But right now we're still showing a little bit of caution, but more neutral. The the TLT to the SPY also sitting right there. We need to see a little bit more juice in the SPY and a little less juice in the TLTs. So more neutral, but this one very bullish.
I think there's a big contest, Mish. You win $1 million if you could predict the day the Russell comes out of the range it's been in for, it feels like, a decade.
Well, are you caring whether it's to the upside or the downside?
Yeah, I mean, do something.
Well,
I don't care.
what's really interesting to me right now is you're very close to the top of the range.
Yeah,
and
it's
we're
gonna
sort of
break out.
smack dab in the middle. And that's
Yeah.
why I'm showing you these indicators, because to
Right.
really be able to see the IWM take out its most recent highs and the new all-time high, and that's one of those close your eyes and just follow it situation and don't think logically.
Yeah.
That I think that's really where the transportation is going to be key to the equation, and also XRT is going to be key. The retail sector is going to be key to that situation. So, and of course the Fed, if they don't do anything crazy, which I would assume that they're not going to do anything too crazy. So there you
maybe
go.
we don't have to worry until Powell, it comes up to whether Powell is renominated or not, and it looks like he's not. And maybe next year is when we get some uncertainty with a regime change at the Fed. What do you think?
Right, and
Especially
I've
after
heard
the scandal.
Right. I've heard mixed things about the whole thing, whether or
Yeah.
not Powell's going to be reinstated. He's certainly very compatible with Janet Yellen, who still insists that inflation is transitory. So if she has any say in it, I think he might have a good chance of staying. I think it would be smart.
Yeah.
Like you say, it could really things could get hairy if all of a sudden they have somebody new in there and policy starts to change. But anyway, I also wanted to show you one other relationship. It's not necessarily a key market relationship, but it's definitely a key inflation relationship.
Yeah.
And I know, Dale, you and I have talked about this.
Yeah.
But this is silver
We're metalheads
versus the gold, right?
Yeah.
So I like to say now, whether you're a silver or gold bear or bull, you hate the precious metals, you're waiting for the precious metals to take off, is irrelevant. What is relevant right now is that silver,
outperforming,
especially last week, really started to outperform gold.
Yeah.
Now, right now, coming into today, silver is only up 0.5%, and
Yeah,
gold
it's giving back a little.
Yeah, and well, no, they're on par because gold's up 0.5%, silver's up 0.5%. That's healthy. So when I say healthy, it means it's healthy for silver, but more importantly, it also shows that inflation hasn't even begun to kick into gear yet. So I'm watching the fact that the market's going up while inflation is going up, and food prices are going up, and energy prices are going up, and oil prices are going up. And of course, any intelligent person is going to say, at what point does that inflation versus the stock market, where they both go up in tandem, all of a sudden divide?
Yeah.
And the stock market starts to fall as a result. And usually that would mean they're expecting higher rates. The Fed finally has to do something. But right now, the Fed really does not want to, especially Jerome Powell, and especially going into 2022 when we have midterm elections. Nobody is going to want to upset the apple cart at this point, which is why inflation can really go out of control.
Okay. A very interesting presentation. And yeah, it means economic strength when the silver is outperforming. And you and I remember when the ratio was 40, right? A long time ago. So, maybe that's where we're going. Silver definitely looks like your preferred long here. Any other commodities? And also, I know what I wanted to ask you. You had a response to when I said there were too many dollar bulls, too many euro bears. I guess that, that still applies. There's a lot of dollar bulls, and, the dollar pulled back from those highs, but it's holding 93.5 and trying to bounce.
Well, this
Is
this
this going to
chart
play
does
a
not.
role? Yeah.
Well, yeah, and this chart, by the way, let me go back because I like my dollar chart that I can see better on my trade station. So let's go to
Okay.
here. Can you still see my screen?
Yeah, has it got your UUP up?
Oh no, okay. So I have to change.
You have to stop the share and then reshare.
Right, let's do that. Hold on. Why am I not seeing your? Come on, come up here, Zoom. Come on, come on. Sorry about this.
That's okay.
Quit Zoom, close window, Zoom. Oh, why am I return to meeting? What the heck? All right. Sorry
right.
about this.
No, that's okay. We could stay with this.
I don't know why I can't get, maybe I'm in the wrong screen. It's not allowing me to.
You have to stop your current share and then resume.
I know. I can't even get back into the main Zoom thing. Oh, here we go.
Yeah.
The controls were sort of hidden.
It was in the 70s, ride the curve, 80s, it was 40.
Uh-huh. You know what? Well, let's go back to the other charts because you could see
Okay.
them. And even though I can't show you DXY, I could at least show you now what's interesting is here's the UUP. And this is
Right.
because I'm on stock charts. They don't have the DXY. They don't do the
Right.
continuous contract. At least I don't think so. Let me double check, but I don't believe they do. No, they don't.
Okay.
So we'll have to go back to UUP, which I don't really love looking at. I like looking at DXY better. But
Those are
also, I mean, so you mentioned,
dots.
right, it's
Yeah.
still in a bull trend, no doubt. It's come off a lot. But until it breaks down under this 50-day moving average, it actually is still bullish. I think that it will have a hard time getting through 94.50 to 95 if we're looking back at DXY.
Yeah.
I actually still think it's relatively vulnerable. But let's look at this. Remember, this is still the gold relationship. So this is the UUP relative to the gold. So it's not so much the dollar has to collapse before the gold goes up. It's more the relationship. And right now, the dollar is still underperforming gold. Isn't that interesting?
Yes. Yeah.
See that?
Gold has acted very well in the face of a stronger dollar.
Exactly. And if we look
So
at
what's going to
this,
happen if it weakens is the question you have to ask yourself.
oh, well, then we're really going
Yeah,
to be in big
right.
doo-doo with inflation. And then, by the way, this is a momentum indicator down here and looking at the dollar, and it's just sitting on the 50-day moving average here, which means either the dollar is in a make or break. It's either going to hold here and try to test those highs again, or if it can hold here and starts breaking down, it could get a little bit uglier in terms of the dollar. So now you wanted to see some other commodities. The thing that I'm
just
really
curious.
watching here.
Yeah.
All right, let me just get back to a leadership.
Always
that's
interested in what you're
okay.
watching.
Well, I was supposed to be buying natural gas on Friday. I wanted it to close above 1840 and it closed at like 1837. I'm like, darn, now it's trading $1 higher. It's coming in up here. But what's interesting about the natural gas is we rode this thing all the way up. We got out and I've been waiting for the opportunity and it actually came Friday, but we'll see what happens here at 20. But nonetheless, the idea is that if you look at the natural gas chart, particularly at the weekly chart, it doesn't look like it's ready to slow down at all. Yeah. So if it clears 20 at this point, I would probably say that that's a good sign. Or if it comes back down closer to around that 1840, then it's probably a good buy against, let's say, 18, because that's where you have a 200-week moving average. So that's still in play. If we take a look at, we've been long wheat. Now, of course, you know, there's the futures wheat and then there's the wheat ETF. So we buy the ETF. Yeah. It's coming in. It's due to come in right now. I'm looking at it on my trade station, 42 bid at 45. Here it shows that it closed at 39. So it's going to take out all of this 740. And then it has to get through, obviously, these 753. But what you see here is, again, a giant level of sideways consolidation. And yet we have not been able to see follow through to the upside. All of the commodities, including silver and gold, have been a buy weakness, sell strength scenario.
Yeah.
So I think
Ranging.
for those people who want to play along and feel like they've missed it, what I can tell you right now is from my days of commodities trading, when you start to see the sell strength buy weakness flip to weak strength is getting volume and follow through, and that's when you can start to see a real parabolic move. And so that's going to apply to pretty much all of the commodities right now. I'm in wheat, but I like to look at DBA because that gives you exposure to everything.
That's been sideways just forever,
and that's
too.
been sideways. So it's the same kind of thing. Now, I think if it gets back over this 50-day moving average, then that would be interesting. So figure it's coming in around 1905. If you can get a move over, I'm looking at 1915, then I would probably want to get into it. But the same situation, even if you say, I want to wait for 1950 to clear, if you get 1950 to clear and you get a situation where volume is coming in on that breakout, that's a game changer for commodities. And along with my silver gold ratio, it's telling you that things could get really hairy and there's a lot of money to be made in commodities for those who like trading it. And for those who never traded, I encourage it because there's gold in them hills, as they say. And then finally, though, also is look at how DBA has been underperforming. I switched this back to the SPY as the benchmark. So that would be something else to look for is, not only would DBA ready to explode, but if it starts to look like it's going to outperform the SPY and the momentum increases, there you go. So, we have some money in commodities now. We're in silver, we're in wheat, we're in energy. Unfortunately, like I said, I hesitated on Friday because it was Friday. But you don't have to be in everything. You can just have good positions in a few of them. We're also in sugar. We've been in sugar for like ever. And I mean, forever. This has been my longest running position that I've had. We bought this at 5 and we're still in it. It's come off a little bit, but this is another one. If cash sugar, continuous contract sugar can get back over 20 cents, then I think that's another one to keep your eyes on. And we'll just add to the position at this point.
You mean 10 cents? Well,
no,
on
it's
this
20 cents. The 20 cents in the continuing, SB at SB is trading right now at 19 cents, 0.12. Yeah, so it would be 20 cents.
Okay.
Yeah.
All right.
And then of course, we could look at we could look at some of the, steel, for example, which was so frustrating because it went straight down, and that was because of China. Now you have this 200-day moving average and you have a little bottoming formation that could actually get going. Copper, FCX reported last week, and yet that's still looking interesting too. All of these commodities, as far as I'm concerned, are just telling you that they're basing out and they're getting ready to explode. And like I said, that could be the time when we start to see the market finally get hit a little bit, or it could be that we see both going up for a while. And then, of course, like I said, you want to keep an eye on those rates and the relationship between the junk bonds, in particular with the long bonds, because that could give you an indication, not so much that commodities are going to go down, but that the stocks are going to go down while commodities continue to go up.
And thanks for fulfilling my forecast of you being one of the best intermarket analysts, understanding and teaching the relationships to people who wouldn't understand it without you bringing all these different things to their attention, Michelle.
Thank you,
So,
Dale. Thank you so
excellent, excellent. I mean, you bring clarity to what, a lot of people see as confusion right now. So bullish, commodities. And if we ever get a weaker dollar, maybe that's the jet fuel for them to come out of here. And thank you for having a giving spirit and sharing with our community all these years, coming back here. And because I know that to, attain the level of expertise that you have, that it wasn't easy. So thanks for giving it away when you come here, Michelle.
Oh, my pleasure, Dale. You're a good longtime friend, and I really appreciate your loyalty to me. So thank you.
Yeah. So, people want to follow you and, see what you have to offer. If you want to show your website now, you, you guys know I'm a big believer in intelligence gathering. So, you selected a few people, us first. I'm kidding, but that are good, and you can learn from. It's good to have like a cross section of ideas, and if you find people that are skillful and you can learn from. I subscribe to a lot of people. I talk to a lot of people. I don't have one original idea in my head. How's that, Mish? All right. So
All right.
there you
Well,
go.
there's the website. This is,
Yeah.
we have this thing called, this is the daily. Keith writes a weekly, which is great. We have a new part of it. We're doing a lot of cryptocurrency. So there's all this cryptocurrency commenting here. If you go down here, it gives you the highlights of the week, all the risk gauges. So this is all the free content that's really excellent. A lot of these relationships I'm telling you about is from our Big View product, where we really look into the different relationships there and these gauges. And at Market Minute on Twitter. And also we have a YouTube channel, Market Gauge YouTube channel, which
Cool.
all my hits that I do on the media are put up there. So if you ever want to
Nice.
see what I'm saying to Charles Payne at
To
Fox
the
or
globe.
Yahoo Fox.
Yeah. Yeah, to the globe.
To the
To
globe,
the universe.
exactly. To the universe, to the metaverse.
Well, Michelle works with her husband, Keith. They met on the floor, and you guys are a perfect example of this math. 1 + 1 = 11. So, thanks so much, Michelle. Good hunting
All right.
Good hunting this fall, and I'll get back to you, and we'll set up another time. And I'm going to really be paying attention to the junk bonds here. Appreciate
Okay.
that.
All right. You guys, thank you so much. Have a great one.
My trading warrior sister, Michelle Schneider, and you could follow her at Market Gauge, and go to her website, check it out, and we'll see everyone tomorrow for Turnaround Tuesday. In 17 minutes, you could join the team on the morning edge, and don't just count your pips, count your blessings. Adios, everyone. Good hunting today. Good luck. I'm not against luck. All right. See you, Monica. See you, Brock. Thanks again, Michelle.